Developing story, this headline from the Bloomberg Professional Service. President Biden is expanding Russian sanctions to Nord Stream 2. That headline crossing moments ago on the Bloomberg. Worth repeating, President Biden expanding Russian sanctions to Nord Stream 2. Developing story coverage coming up right here on Bloomberg. Equities lower across the board as President Biden announces those sanctions against Nord Stream 2. New penalties hitting additional elites. S&P 500 now down by 0.8%. We're off session lows, but bottom line is pushing further into correction territory amid the rising tensions and a cyber attack on several Ukraine government and bank websites. The S&P lower by 31 points. We've got the Dow down 168, a drop right now of 0.5%. NASDAQ lower now by 156, a drop there of 1.2%. 10-year yield, 1.96%. 10 years down 6/30 seconds. Spot gold up 0.5, 19.08 the ounce. Crude now up 0.3%. West Texas Intermediate, 92.21 a barrel. Brent is at right now at 96.86 for a barrel of Brent. Well, plenty of debate about the size and frequency of the Fed's next move, with the decision coming March 16th as policymakers deal with those Ukraine tensions and inflation. Elsa Lignos is global head to RBC, global head of FX at RBC Europe Limited.
At the moment, you've had material upward revisions to inflation since the tail end of last year to where we are today. And while they'll be very mindful, like I said, of the risks and geopolitical risk premium getting baked in, they can't ignore a domestic inflation problem at home.
And again, 10-year yield right now, 1.96%. After the bell today, we will be hearing from eBay, NetApp, Booking.com, and Hertz. S&P down 32, down 0.8, and that's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, we are streaming on YouTube. It is Wednesday, February 23rd, 2022. Carol Massar, my co-host Tim Stenovic, is off today. Joining me is Bloomberg Markets correspondent Kriti Gupta. And Kriti, we've been bouncing around a little bit, certainly on the equity trade.
Yeah, it is messy. When we were supposed to get that technical correction, a bounce back from it, well, here we are, another down day.
Yeah, exactly. So we're going to talk about that. We're going to talk about that headline Charlie just mentioned, President Biden expanding Russian sanctions to Nord Stream 2. So we will get the latest on that. We will be hearing from the Ukrainian foreign minister. Also, it's not just a ground war, Kriti. It also is a cyber war. So we're going to have the details on that.
Yeah, I mean, no surprise here. Check out the stocks that are actually in the green. Palo Alto, CrowdStrike, that defensive trade showing up in cybersecurity.
I love it when we kind of see news and it impacts the markets directly. Also, Andy Kurtzig, founder and CEO of Just Answer, has nearly 300 employees in Ukraine. We're going to check in with him how they are managing and what steps they are taking. And also, we've got a most read on the Bloomberg today. I love this story about Goldman.
Yeah, fascinating stuff just in the kind of crux of the issue when we have so many labor issues across sectors.
Right, exactly. All right. All of that to come. First up, of course, you are listening to Bloomberg Business Week, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. All right, let's get to that market drivers report. Let's set the Business Week agenda on this busy Wednesday. And joining us right now, we have with us Bloomberg News cross-asset reporter Vildana Hyrick and also Bloomberg Markets senior editor Mike Regan. So, Mike, just quickly, set the tone. What jumps out for you in today's trade?
Well, it's definitely still sort of a wait-and-see period, it feels like, to see how bad this Russia-Ukraine tension actually gets. I think you were right to key in on the cyber warfare potential of it all. We did see a noticeable sort of move lower in equities when that news hit that the banks and government websites in Ukraine had been targeted by denial of service attacks, presumably from Russia. So I think that is sort of an escalation of the tensions that should be on a lot of investors' minds, particularly if, it's not just Ukraine that Russia decides to target. If they could perhaps, send some warning shots across the bow of the U.S. With some sort of denial of service attacks. And, that's the type of thing, Carol, it'd be tempting to just sort of sell technology stocks because of that, and buy the security stocks like you mentioned. But it's just the type of thing that could really, I think, potentially affect any sort of sector. I mean, the Colonial pipeline hack of last year is still pretty fresh in a lot of people's minds of the type of thing that, it really could be anywhere if that were to come. So I think that's really sort of underscoring some of the nervousness we're seeing today.
Yeah, Vildana, hop on in here because we hear so much about these geopolitical tensions. We've heard about just kind of this hawkish pivot from the Fed, kind of spooking investors as well. But sometimes it's as simple as the technicals. Walk us through what you're watching.
Yeah, and I think you put it in a really great way, saying it's just been really messy trading because it has been really hard to find a constant for the market. Like today is really emblematic of a lot of what we've seen, which is we opened higher and then by noon we are reversing course. And so yesterday we saw the S&P 500 closing in correction territory, meaning it's down 10% since its last record high, which was at the start of January. And so a lot of people are just looking at charts and trying to parse through support levels. So this is something that I've been looking into, and investors are just trying to figure out where things could potentially stabilize or if there's just further, we could expect stocks to continue to sell off. So for a lot of technicians, actually the picture isn't looking so great. I talked to somebody at Piper, the strategist over there, Craig Johnson, was saying that the S&P 500 is living on the edge, is the phrase he used, because it is trading below its 200-day moving average. And he's keeping his year-end price target for the S&P 500 at around 5,100. But he said the backdrop really is deteriorating quickly, and so his confidence in his year-end price target is also deteriorating.
Mike, this is a tough environment where we have things thrown at us on a daily basis that certainly impact the trade. I've been watching the VIX in terms of the curve, and, we understand that if this situation with Russia eases, the markets will settle down, right? But we just don't know if and when that will happen. It's the same thing with the Fed. We know the Fed's going to raise rates. We just don't know how aggressive and what's going to be the trajectory. There's a lot of questions out there that make it tough for investors to really trade this market, especially longer term.
Yeah, what's fascinating?
Do we have Mike?
There we go.
Come on in, Mike.
Carol, if you look at sort of your standard playbook for how markets react to geopolitical tensions, everyone will tell you, well, there's often a very sharp drop, but it usually resolves itself pretty quickly. And that geopolitics rarely cause major corrections or bear markets. I think what's different, though, and what is really key this time is that some of the sort of ripple effects of these tensions, higher oil prices, higher industrial metal prices, higher wheat prices even, all of that is feeding into sort of the bigger concern of the markets, which is this inflation and what the Fed will do to tame it. And I think you're right in that we would really need to see some sort of signs that this inflation is there's an inflection point in inflation and the Fed's reaction to it. And given all the comments from the Fed officials since the last meeting, Raphael Bostic yesterday being the most recent, it doesn't seem like any of this is enough for them to blink, to sort of change their outlook for interest rates. It takes a lot to cause the Fed to pivot from sort of a chosen direction.
Yeah.
And so far, it doesn't seem like these geopolitical tensions are really enough to do that because they are sort of exacerbating that price shock, that inflation shock that the Fed is trying to counteract. So it is a tricky market to navigate for sure.
Makes our life interesting, that's for sure. Vildana, thank you so much. Vildana Hyrek, cross-asset reporter at Bloomberg News. Mike Regan, our senior editor at Bloomberg Markets. Let's get to the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. And Creedy, today's number is 18. Moderna reaching a distribution deal with Adium Pharma to market its COVID vaccine in 18 Latin American countries. The shots will be supplied from Moderna's plants in the U.S. and Europe. Latin American countries have relied heavily on vaccines produced by AstraZeneca, Sinopharm, and Sinovac in domestic campaigns, while also ramping up the number of messenger RNA shots produced by Pfizer in recent months. So, yeah, these deals go on. Just a reminder that we're in a global pandemic.
Yeah, we should also mention that Moderna is one of the worst performers today, and they're reporting earnings tomorrow.
That's something to keep an eye on. All right, let's also keep an eye on world and national news. Doing that for us, Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. Russian President Vladimir Putin says he remains open to diplomatic solutions concerning the situation in Ukraine, but in a video address to his nation, Putin argued the security of Russia's citizens is not subject to negotiations. His comments come as we learn that President Biden is leveling new sanctions today. He's imposing new penalties against the Russian company behind the Nord Stream 2 pipeline, as well as its corporate officers. The UN held a meeting today concerning the situation where Ukraine's Foreign Minister Dmitry Kuleba urged a united response to Russian aggression.
What is happening right now in eastern Ukraine, where Russian tanks are rolling in, and along the Ukrainian borders, where Russian forces are amassed in enormous quantities, must be a concern for everyone.
Ukraine's Foreign Minister Dmitry Kuleba will be interviewed on Bloomberg today at 3:40 Wall Street time. Well, the threat of extreme wildfires may increase by 14% this decade, and the damage will be more than most communities can manage, as we hear from Bloomberg's Amy Morris.
The report from the UN Environment Program shows that even if there are deep cuts made to greenhouse gas emissions, wildfires will be more intense and destructive. But UN researchers say many nations are still spending too much time and money fighting fires and not enough trying to prevent them. Communities are not ready for what wildfires are expected to bring in the next 25 years. Researchers say fires are changing because we are changing the conditions in which fire occurs. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in the nation's capital. It's just a reminder. I do feel like these are the kinds of days that, headlines are going to keep coming, right, when it comes to Russia and Ukraine. I'm sure you do. You're watching the markets. You're on TV. You're on radio. You just have to kind of keep an eye and just get a feel of, what might be coming or what does come and just look to see what impact it has.
Yeah, and what's surprising is we do see these headlines. And in the early moments of this crisis, you did start to see kind of traders react to every single headline. Now it just kind of seems like there's this fatigue, this exhaustion kind of baked into the market.
Yeah, like you almost get to the point, okay, there's some volleying going back and forth.
Exactly.
And let's see what actually sticks and has a longer term impact.
Right.
In the meantime, there is a story that Kriti and I are watching and wanted to bring to you. Germany's economy minister saying that the country could do without Russian gas. But as our reporters point out, Kriti, it's not going to be easy.
Yeah, and what's interesting about this story is simply that Russia is not the only spot where you can find it. Remember, we had Joe Biden, the Biden administration, try to say, maybe we can kind of renegotiate some of those contracts from Qatar, and also the number two suppliers, also Norway. They're already pumping at full tilt, and Germany really have no means of importing those cargoes.
Listen, it's really rough. Europe's industrial powerhouse, by the way, currently relying on Russia's Gazprom for more than half of its gas. And if anything, demand will only grow as the country phases out nuclear and coal-fired electricity. Number two supplier, Norway, already pumping at full tilt, and Germany has no means of importing liquefied cargoes. I mean, this is, we talk about these bigger, broader supply chains. It's stuff like this that makes you think, okay, I need to have maybe multiple sources where I get things. The thing is, countries work out these contracts, right? And everything's fine when it works.
Right, and they do it way in advance. And that's what's so tough here, because a lot of these contracts that have been negotiated by Norway, by Qatar, well, they're happening with Asian countries, Singapore, South Korea, Japan, who also need those supplies. So what do you do? What's that phrase? It's like steal from one, give to the other, or whatever the phrase is there.
It's also tricky that I think as countries are shifting away because of climate change to cleaner fuels, they're maybe probably cutting down the outlets that they go to, but they're also maybe cutting down some of their domestic production as well. This is Bloomberg.
Put progress in your portfolio. Invest in sustainability with 3 new funds from Fidelity.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a down Wednesday. The Dow, the S&P, NASDAQ trading at or near session lows. Right to the numbers. We'll give you the why in a moment. Familiar themes, those sanctions, Ukraine, Russia, S&P down 41 points now, drop of 1%. We've got the Dow down 242, down 0.7. NASDAQ now tumbling 184, drop there of 1.4%. Broad-based selling, Russell 2000 down 0.8%. NASDAQ 100 index, by the way, down now by 1.4%. Bottom line here, S&P pushing further into correction territory. 10-years down 0.8, 10-year yield 1.97%. Gold is up 0.5%, $19.07 the ounce, while West Texas Intermediate crude up 0.3%, $92.16 a barrel. Brent, the global benchmark, $96.87 for a barrel of Brent, little changed, up less than 0.1%. Equities lower across the board as President Biden expands sanctions against Russia with new penalties hitting additional elites and the builder of the Nord Stream 2 pipeline. Recapping, S&P down 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. A lot going on when it comes to Ukraine, Russia, the U.S., and NATO allies. Charlie, of course, mentioning the U.S. unveiling sanctions on Nord Stream 2 pipeline. That's the latest round of sanctions from President Biden. The EU has called an emergency in-person summit of the bloc's leaders. That is to happen tomorrow. And then we've often seen a lot of analysis about what we got from the President of the United States yesterday about sanctions, how they didn't seem to do much. So let's get the latest on the situation, what you need to know. Jody Schneider is political news director for Bloomberg TV and radio. She joins us in our Interactive Broker studio in New York City. We keep saying, Jody, it's fluid. What should we, the President just unveiling, right, another round of sanctions. Talk to us about the significance of that.
Yeah, so we're expected to see this expanded package maybe as soon as today. We're hearing this from people familiar with the matter.
They haven't been done yet.
They have not yet been done,
okay.
but we expect we're seeing them, and our Bloomberg News colleagues are reporting this, according to people familiar with the matter. And the penalties would hit additional Russian elites that are close to Vladimir Putin, as well as the builder of the Nord Stream 2 pipeline. This would be on top of the sanctions that were announced yesterday, that the president announced in his remarks at the White House, which some said were measured, others said were a little too modest. And he's getting some criticism in Congress, mostly from Republicans, saying, why have we not gone far enough? The president yesterday in those remarks said that the beginning of the invasion was occurring, and yet he wasn't hitting hard. So this is what's taking place now. The White House says that they're going to continue to roll out sanctions if Putin, I guess, would escalate the incursion into Ukraine. So we're watching all that. We're also watching what's happening with the EU and other NATO allies and what they do with sanctions.
I'm really glad you mentioned the EU allies, because we've kind of very closely been here before a couple of times historically, like 2014 in Crimea, 2008 in Georgia, very similar concepts. How much further can these sanctions actually hit Russia? Are they still effective, given we've gone almost 10 years where Russia has been trying to de-dollarize and trying to kind of bolster or cushion, I should say, the impact? Are they still going to be effective?
Well, that's right. That's a key question in all this. I mean, I think there's two questions there. One is, does Vladimir Putin care? Right. Is this a deterrent effect? Has this been a deterrent effect at all? It doesn't really seem that it has. Now, maybe it will deter a dramatic escalation. Yeah. But the other one is, as you point out, do they work overall? And they haven't really seemed to work so far, right, in the sphere you're talking about. But these and of course they could dramatically escalate if they went against big Russian banks, which has been threatened. That's a different situation. Right. And if they went to the nuclear option, as they've discussed, of doing the SWIFT, right, currency sanctions, that would be a whole other matter. No one thinks that Joe Biden wants to go there. And then there's a chess game involved. If you give up too much with the sanctions, because you don't really have anything else, he's made it clear that there will not be American troops on the ground, in Ukraine. So you have to hold back a little bit, because what currency do you have if you use everything now? So it's a waiting game at the White House, and everyone's watching and waiting to see what Vladimir Putin does next.
Is there a tipping point, do you think, for President Putin in terms of something that does slow him down significantly? Because you look at his speeches and what he has said, he feels this territory was part of the former Soviet Union. It feels like this belongs to Russia. And so a lot of nationalism, right, coming from him. So is there something that is seen by the experts as there is a tipping point that will slow him down, or do most expect that he's going to go all the way? Yeah, and that's another set of key questions in this. He has made it very clear that what he wants, that what he kept saying could be something, the West's get out of jail free card here would be to promise never to allow Ukraine to become part of NATO, which of course is not something that the U.S. or its allies in Europe are willing to do. So it's unclear what else might satisfy him. And there's been some thinking that that's what these diplomatic efforts with Anthony Blinken and his counterparts among the European nations have been in recent weeks and months, that to try to come up with something that could satisfy Putin, but they haven't been able to seem to come up with anything. One quick question. How political is this becoming in the United States? Because we've even seen division among the Republicans, but I just wonder about this lack of support, congressional support for President Biden in this. Yeah, and this, of course, it's a midterm election year, and the whole thinking is, foreign policy doesn't really matter in those elections, but there's a big, there's one big caveat this year that could make it matter, and the price of gasoline. And if this really disrupts oil markets and gas prices, which have been going up because of the inflationary pressures, if they go up further, this could be really difficult, as Jimmy Carter saw, as others saw when inflation tied to international tensions went higher, and that could really hurt the Democrats in power. What are you watching? 30 seconds. Final thoughts. Well, we're watching Putin's moves, and also another thing we're watching is China. Yeah. China's response here is very interesting, because while Putin and Xi spoke at the Olympics and they had those meetings, we haven't heard a lot from China in recent days. Very, very modest kinds of comments in state-owned media. So I'm watching them. They've been upping regulatory oversight of their executives and businesses. This is true. But I agree. It's a really important aspect of this that we need to keep an eye on. Jody, thank you so much. I know it's busy. Jody Schneider, she's political news director for Bloomberg TV and Radio in our Interactive Brokers studio. Let's not forget that we will be hearing from the Ukrainian foreign minister in an exclusive interview on Bloomberg Radio and Bloomberg TV. So we will take you there live about 3:40 p.m. Wall Street time. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Wednesday. Carol Master along with Kriti Gupta. And Ukrainian situation, we know that there is stuff happening on the ground, right? We know that militarily wise. But there's also a cyber warfare that we have to think about.
Yeah, it's wild, and it's totally showing up in the markets. Carol, you know I love to watch stock market. A lot of red on the screen, green when it comes to cybersecurity stocks.
We're going to get into what's going on when it comes to cyber attacks in Ukraine, in the Ukraine. All right, first up, let's get back to your top business stories and a check on that trading day. Hey, Charlie Pellet.
Well, hello there. Red on the screen, Carol and Kriti. The Dow, the S&P, NASDAQ session lows right to the numbers. We'll give you the why in a moment here with the S&P now down 52 points, down 1.2%. The Dow is down 302, a decline there of 0.9%. NASDAQ down 236, drop for the NASDAQ Composite Index right now of 1.8%. NASDAQ 100 Index down 1.8%. Russell 2000 lower by 1.1%. 10-year down 8/30 seconds. 10-year yield right now 1.96%. Spot gold is up 0.5%, 19.08 the ounce. Crude oil has been advancing, up by 0.1% right now on WTI 91.97 a barrel. Traders and investors continue to monitor developments out of Ukraine and Russia, and it is raising questions, the higher price of oil, about inflation implications in the United States. Anastasia Amoroso is Chief Investment Officer at iCapital.
The biggest reaction that the markets are likely to have to Russia and Ukraine is not necessarily in the equity markets, but through the commodity channel. And you see today, once again, the price of oil is higher. We're inching close to that $100 barrel of crude oil. And what does that do to demand? At one point, does it get disrupted? These are all the questions that the markets are grappling with right now.
Tenneco has agreed to be acquired by affiliates of Apollo Global Management in a $1.6 billion deal to take the auto parts supplier private. Tenneco shares surging today. Tenneco up now by 93.2%. Lots of earnings after the bell today. Among the companies scheduled to report include eBay, down now by 0.5%. NetApp Inc. down 1.5%. Booking Holdings lower now by 1.4%. And Hertz Global Holdings lower by 2.9%. Recapping, sell-off underway. S&P down 53, down 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Kriti Gupta. Now, as we watch the situation over in Ukraine, there's one other front to keep an eye on, and that is the cyber attacks intended to create chaos and undermine the Ukrainian government. That story from Jeff Stone, cybersecurity editor at Bloomberg News. He joins Kriti and myself here in our Bloomberg Interactive Brokers studio. How are you?
Busy. How are you? Thank you for having me.
Well, it's good to have you here. You are busy. Anything and all things Ukraine right now. What's going on here?
It changes by the day, right? You alluded to this, but we have seen a number of attacks that are intended to create chaos, create confusion, create difficulty for Ukrainian government websites trying to stay online. And it's really tough for banks to stay online.
What does difficulty mean?
They're overwhelmed with inauthentic traffic that appears to be coming from within Russian borders.
And that traffic does what?
Knocks the websites offline. So if you're trying to access your bank, you can't gather your transaction details, for instance. You can't access information from the Ministry of Foreign Affairs, for instance.
That would freak me out.
Yeah.
That sounds scary. How much further can it really go?
It's hard to say. We haven't been in a situation before where a traditional warfare situation, troops on the ground, if you will, is combined with this kind of stuff that we've seen evolve in cyberspace over the past 5 or 10 years. It can get worse.
Jeff, it does feel like Russia is just chipping away at Ukraine on so many different fronts to really kind of undermine the citizens there.
That's true. I think that's part of the strategy. We're speaking with folks in Ukraine who say essentially that the goal here is to exhaust us, it is to intimidate us, it is to wear us down.
Well, I guess my question here now is, if you do have that kind of exhausting, wearing it down idea, can't they go the other way as well? Can't cyber attacks happen on Russia as well? Is this a means of warfare if you're not seeing those physical troops on the ground?
It absolutely is. We know that the Russian government is particularly advanced and sophisticated with this kind of stuff, but we have seen attacks against them. Not from Ukraine as of yet that we know of, but we've seen cases in the past, certainly from the U.S. U.S. intelligence has affected Russian government activity in cyberspace prior to the last election.
Well, this is kind of interesting, right? As we are watching what some would say are 2-week sanctions imposed by the U.S., that you do wonder, right, what's going on behind the scenes in terms of cyber warfare, right? Which is something that doesn't always get talked about, at least initially.
That's right.
But you do wonder. What, are you hearing stuff on that front in terms of the U.S. specifically and NATO allies?
We haven't heard anything about that yet. I would be surprised if it's not happening. They certainly have the capability to take Russian banks offline, for instance, as we've seen in Ukraine, and affect. They can certainly get into emails and things like that. We haven't seen anything indicating that's happening yet, but that's a harder story.
So how do you protect yourself against this? If I'm a Ukrainian citizen, hypothetically, what do you do to prevent yourself?
I think that candidly, your concerns if you're a Ukrainian citizen right now are not in cyberspace. I think that you want to probably take out cash and make sure that you can access your information, have it handy. But a lot of this stuff is kind of a tit for tat in terms of the geopolitics. We know that the Ukrainian government, for instance, is trying to ease some of this burden so that it's not a thought for people yet.
It's just a...
I was going to say, it's fascinating that you just mentioned that you kind of have to look at your cash right now, because anecdotally, I mean, I have friends who are German or live in Europe and have families in Ukraine, and anecdotally, they've said, well, everyone's pulling their money out of their bank accounts. They're spending it on real estate in Western Europe. Really? And this is what the president of Ukraine was talking about, right? He was saying to President Biden, actually say, tamp down the rhetoric, because you're seeing capital flows exit Ukraine at a pace that you just haven't seen. And I thought, my little market hat on, I was like, oh, they're talking about financial markets. That's not what they're talking about. They're talking about people's savings.
Right.
It's wild.
If I can say one more thing, they also we also are trying to keep this as grounded as possible, as you alluded to, the president saying, because fears or overemphasizing this kind of Russian capability in cyberspace plays into the Kremlin's hands. You don't want to create that panic that you kind of alluded to.
No, it's really smart, right, to be level-headed about this. But at the same time, this is our current world, right? In terms of warfare, we've talked about this, right, over the last really decade or so, if not more, that this is how it is often played, or will be increasingly played.
Right.
Well, you're going to be busy. Jeff, thanks for getting up to speed, because this is another side of the story that we just wanted to bring to our audience. Jeff Stone, he's cybersecurity editor at Bloomberg News, here in our Interactive Brokers studio. And just a reminder that we are going to hear from the Ukrainian foreign minister, so we'll get what is on their mind in terms of a nation overall and what their citizens are facing right now.
Yeah, and it's wild, just the different fronts and the different ways that it's actually affecting not just Ukraine, not just Russia, but really every country around the world.
Absolutely. And we're obviously keeping a watch on the markets as they bounce around, a little bit more toned down than they were yesterday, but nonetheless, they're down across the board, down more than 1% on both the S&P and the NASDAQ. Back to World and National News, Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. President Biden is adding to the sanctions against Russia. This is on top of those he announced yesterday. The new U.S. penalties target the Russian builder of the Nord Stream 2 pipeline and its corporate executives. These new sanctions are also in response to Vladimir Putin recognizing breakaway territories in Ukraine as independent states. President Biden's Build Back Better plan may be stalled on Capitol Hill, but activists and progressive Democrats are pressuring him to act on his environmental agenda.
They're lobbying the White House to declare a climate emergency. That could allow the president to use executive authority to shut down crude exports, suspend offshore drilling, or redirect funds to clean energy projects. Several members of the Congressional Progressive Caucus are backing a bill that would mandate a national climate emergency. Former President Donald Trump used a similar step to divert defense funds for a border wall. In Washington, I'm Nathan Hager, Bloomberg Radio.
Opening statements started today in Louisville for former officer Brett Hankinson. He's charged with 3 counts of wanton endangerment, accused of shooting into an adjacent apartment while serving a no-knock warrant on the apartment of Breonna Taylor. Taylor was killed during the commotion, but Hankinson is not charged with her death. Assistant Attorney Barbara Wiley
You will hear that his bullets went through apartment 4 into apartment 3 and nearly hit Cody Etherton as he was walking down the hallway into the dining room of his apartment.
Again, that's Assistant Attorney General Barbara Whaley. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons in our 99.1 newsroom in Washington, D.C. In just a moment, we're going to talk about the most read story on the Bloomberg terminal. It has to do with one of the big Wall Street banks. In the meantime, there's another story by our Jonathan Browning of Bloomberg News about J.P. Morgan Chase. And we've got Kriti, Nigeria, alleging that J.P. Morgan Chase ignored, quote, overwhelming evidence of fraud and stark warnings from its own compliance staff as it kicked off a London trial over transfers to a former oil minister accused of corruption.
Yeah, wild story. Nigeria kicking off a 6-week trial over the role of JP Morgan in those payments. JP Morgan in return calling that claim over those transfers to the ex-minister, quote, baseless. To me, I don't want to stretch this too much, but to me, this sounds very similar to the IMDb scandal over at Goldman.
And this is, and I also go back to the Swiss bank accounts. Like increasingly, there is more and more like we want to know, we want greater transparency when it comes to global financial institutions.
And can I just correct myself? I have one MDB,
Sure.
not IMDb.
That's
Clearly,
okay.
my head's in the film space.
Exactly. Nicely done. We have been watching a lot of films online. But it's interesting that there is greater oversight. We want transparency with financial institutions in terms of who they are transacting business with, especially when there are, regulations, global laws about what are global banks and who they can transact with.
Yeah, especially in a world where those transactions are far more interconnected. I mean, let's just bring this back to the story of the day. Those geopolitics, the reason these sanctions work is because of how interconnected the global system is. And this is just another example of that.
Right. It's a really good point. And there's no leverage if financial institutions somehow are able to go around this.
Right.
Let's just put it out there that JP Morgan, according to Nigeria, acting negligently in transferring some $875 million between 2011 to 2013 from escrow accounts to Dan Etet, hopefully I'm saying that correctly, who had been convicted of money laundering. This is from the Nigerian lawyers. They put that out there today. They cited an email by JP Morgan's senior country officials saying the matter, quote,
I'm a millionaire. I'm not a millionaire. I'm a millionaire. I'm not a millionaire.
Crypto is complicated, but as a tax expert with crypto experience, you can hand your taxes off to me. You do your thing. We've got your taxes. Intuit. TurboTax Live.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Peloton. A down day for U.S. equity markets. We begin with a developing story in this headline from the Bloomberg Professional Service. The United States is eyeing a release from the oil reserves as prices rise on those Ukraine-Russia tensions. Right now, we have got West Texas Intermediate crude down 0.1%, 91.85 a barrel. Brent, the global benchmark, down 0.2%, 96.96 a barrel right now on Brent. Again, the U.S. is eyeing a release from the oil reserves as prices rise on Ukraine. Stocks now lower across the board, remaining lower. In fact, lows of the day. Equities down as President Biden expands sanctions against Russia with new penalties hitting the Nord Stream 2 pipeline and its corporate officers. S&P 500 index down now by 1.3%, pushing further into correction territory. The S&P is down 56 at 4248. The Dow lower by 332, down 1%. Nasdaq is down 246, a drop right now of 1.8%. 10 years down 10/30 seconds, 10-year yield 1.97%. Spot gold up 0.5%, 19.07 the ounce on gold. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, this is our most read story on the Bloomberg today, and it has sat there all day. It's another one by our Sri Natarajan, and I guess, I don't know, can we call it a clawback? We'll see what he has to say. Goldman essentially wants your bonus back. So here with who the firm is targeting is Sri. He is finance reporter at Bloomberg News in our Bloomberg Interactive Brokers studio. Is it a clawback? Is it the ultimate clawback?
It definitely is a threat of a clawback. What they're really doing right now is taking steps to confiscate pay from a couple of their departed executives who left to start this banking startup backed by Walmart. It's a small startup. It would be somewhat similar to Goldman's own consumer banking aspirations, which took root 5 or 6 years ago, and these two executives were key to that. But what Goldman is doing here, which is what is rare and unprecedented about that, is they're going after pay that has already vested and been taxed. We've heard a lot of instances where deferred pay gets taken away. You go from Goldman to JP Morgan, Goldman to Morgan Stanley. You don't have a chance of keeping your deferred pay. That's always
But you don't
gone.
have it yet, right?
You don't have it yet. In this case, they have it. I mean, we also cite examples in the story where even the deferred pay is getting pulled from people who are moving to clients and buy-side firms that would typically not be treated that way. But even if you're willing to set that aside for a second and just count that as an aggressive turn of the dial, what they're doing with the vested compensation that's already been delivered to them, that really stands out. And that, to me, and a lot of the people I've spoken with, is really the prime example, perhaps, of Goldman and its CEO sending a message, making it loud and clear to staff who are still at the bank and thinking about jumping ship. It might be very costly to do so.
Well, what's interesting to me, and you say this in your story, you say that this is something that normally happens when it's used for punishment. It's reserved for cases of misconduct, not necessarily new jobs. And we saw this before, not necessarily at JP or at Goldman, but we saw this. You also quote this in your story, an infamous incident with Andrea Orcel. I remember that story, moving over to I want to say Banco Santander, right? Yeah, the Spanish bank, over from UBS. So this has happened before. It's almost like it's been in the making.
Except that's a little different. That's one level less aggressive because Andrea Orcel, who was running investment banking at UBS at the time, moving to Banco Santander, a Spanish retail lender, what blew up that contract was the fact that his deferred pay was taken away.
Okay.
In this case, they not only took away the deferred pay, but they're also going after pay that has been delivered. That is what makes it a little mind-boggling.
Well, this is interesting because it also speaks to when it's vested, right? These are executives who put in their time, right? And delivered on certain things, right? Can we assume that? And then we're awarded.
Absolutely. I mean, the performance bonus is what all these large Wall Street firms thrive on, and it's awarded at the end of the year. It is supposed to be a pay-for-performance culture. It vests over 3 years, and you're restricted from selling it for 5 years. But those are all steps put in place to make sure no one's making a quick buck so that the stock's going up in the short term and then you cash out and the stock tanks, which is why these measures are in place. But you're using some of those restrictions to now find a backdoor into clawing back that pay.
Shri, it sounds like Goldman's getting incredibly aggressive with a lot of stuff. What's going on here?
It's the broader backdrop. We have been speaking about for the last 2 years, through the pandemic really, about this intense battle for talent. What have all the major firms done? In a period of record revenues and profits, we saw for when it came to their 2021 pay cycle, all of them increased their compensation. They boosted pay. Bonuses were raining down, and the bonuses were going up to a level that you hadn't seen since the financial crisis, and in some places to a new record. That is one side of how you deal with a talent war. The other, uglier side, I guess, is also trying to send a message to those who are leaving that there is only one top dog in town, and you don't want to get on the wrong side.
Well, what's interesting to me is that this also follows, like you said, this compensation has been increasing for a while, right? And it's also eating into their bottom line. So you kind of understand in a way why they're making this decision. It's getting very costly.
Yes and no, I would say, because remember the firm that coined the phrase, or at least made the phrase popular, long-term greedy? That is Goldman Sachs. Its former leader, Gus Levy, in the 1960s when he was leading the firm, till his dying day, he was the CEO of Goldman Sachs. He ran that place. And that is when this whole idea of you have to be long-term greedy took root. And over the last 50, 60 years, that has been a firm that's been closely associated with Goldman Sachs. So the question is, some of these measures, which are likely to irk clients, and we point out a couple of instances in the story where it has irked clients or has led to some awkward conversations, does that eat into this long-term greedy ethos? In a time of record capital markets, record deal-making activity, massive trading activity, you may not necessarily see it in the numbers, and the Goldman Sachs brand has been built over 150 years. Nothing's going to shake the foundation if 2, 3, 4, 5 clients are upset, but you have to wonder what long-term impact it does have if the trend continues, and really, is that the best way to boost loyalty and association with the firm?
Well, and I do think bottom line, it is about the bottom line, right? Goldman concerned about, preserving the revenues, the relationships, right? Because when some of these big top earners and deal makers go, that certainly impacts them.
Yes, but they've also done a fabulous job over several decades of cultivating what is the corporate world's most powerful alumni network. When these successful rainmakers leave 200 West Street, Goldman's headquarters in New York, and take up a lucrative second career, they will come back to Goldman for advice, deals, trades. That is really a connective tissue for a lifetime of shared riches.
Yeah, and you always feel like Goldman's really, really good at that. We're going to watch and see if other Wall Street firms follow. Shri, fantastic story. Shri Natarajan, finance reporter at Bloomberg News. It is our most read story on the Bloomberg today. All right, February is Black History Month. Every day this month, we are celebrating significant moments in U.S. Black history. Now with your installment for February 23rd, here is Bloomberg's Renita Young.
On this day in Black history in 1979, Frank E. Peterson Jr. is named the first Black general in the U.S. Marine Corps. He was determined to serve his country despite racial discrimination. Peterson first attempted to join the U.S. Navy, but was asked to take the entrance exam over because administrators believed he had cheated. In 1950, Peterson enlisted in the Navy, and 2 years later, as a Marine, he completed flight school and was commissioned as a second lieutenant. Peterson went on to become the Marines' first Black aviator and served as commanding general for the Marine Corps Combat Development Command. Throughout his career, Peterson received several military awards, among them the Navy Distinguished Service Medal, Defense Superior Service Medal, and the Purple Heart. So in 1988, Peterson retired as lieutenant general after serving as special assistant to the chief of staff. That's today in Black history. I'm Renita Young, Bloomberg Radio.
All right, in just a few minutes, we're going to head over to our TV teams to talk about the markets. Right now, stocks pretty much hovering near their lows. We're down almost 2% on the NASDAQ, and we're looking at about a 1.4% decline on the S&P 500. Bloomberg Business Week, Carol Masser, along with Kriti Gupta on this Wednesday. This is Bloomberg.
Countdown to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And this is the countdown to the close. Just 60 minutes left in the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our partners in crime, colleagues Carol Massa, Kriti Gupta, as we welcome across TV, radio, YouTube, a day where once again we're near lows of the session, Carol, on a drip effect. More sanctions, more tension.
Yeah, absolutely. Continuing to weigh on the overall market. I've been kind of keying in on the retailers, TJ Maxx, Ross Stores, under pressure, kind of dragging down the overall S&P Retail Select Index, and that after disappointment, Kriti, about some of their results.
You know, and what's interesting is that even on a down day, you would think with all the geopolitical risk, you would start to see a little bit of that haven bid going into tech, and yet they're the ones that are actually leading that decline.
Yeah, where is your safety today? It's not in bonds either. It's currently not in stocks, off by 1.4% on the S&P 500, almost 60 points lower on the day is currently where we stand on the S&P. But big tech, once again, feeling the pain. This is what drags your benchmarks lower, off by 1.9%, 252 points to the downside for the Nasdaq. The Dow Jones also off by more than a percentage point now as we speak. And Russell 2000, the small caps, not finding any love. We're off by 1.07%. That's 21 points lower, Taylor.
I feel a little bit like a broken record. Energy, again, the only sector in the green for the year and the only sector in the green for the day as well, as you're really getting, I mean, Brent earlier this morning touching a 99 handle. So energy stocks, of course, are up about 0.6%. And Romain, of course, this is sort of the story of the year, this rotation out of technology into value. Technology there at the bottom of the screen, you're off 2%, and discretionary as well, that sort of risk-taking behavior that is off the table. It's off almost 3%.
Yeah, I mean, there's so much talk about the S&P hitting correction. We're now potentially talking about a NASDAQ potentially getting into bear market territory, down 17% from that all-time high. 85 of the NASDAQ 100 stocks, we should point out, since that all-time high, are down by 10% or more. So this is broad-based sell-off you're seeing. And you're seeing it again today here with Amazon lower by about 2.8% here. We should point out most of the big cap tech stocks are lower here on the day, including Apple, Microsoft, Tesla, NVIDIA, Visa, Comcast, Alphabet, you name it. One of the few bright spots is in the energy space. You're seeing Diamondback Energy, the original FANG, by the way, up 1.5% on the day. That was on the back of their earnings, which are actually pretty good. And more importantly, the idea that they talked about discipline and not necessarily going back out there and drilling more. Remember, this is a big pioneer in the shale space here. And even they're saying, even with $100 oil here, they're holding back a little bit. We're going to talk a little bit later about TJX companies and some of the inflationary pressures they're dealing with, some of the supply chain issues they're dealing with. And then right there at the bottom of your screen, one of the few Russian stocks that actually trades here in the U.S. Yandex, a big internet company, ride-hailing service, down 12%.
And meanwhile, I like the way that you talked about the breadth of the selling, Romain. I'm going to talk about the lack of breadth in the buying and where we are from a technical level. This is sort of a great chart that was being brought up by Oppenheimer, the technical analyst over there, Ari Wold, talking about how at the moment only about a third of stocks on the New York Stock Exchange are above their 200-day moving average. You go back a year, 85%. For our radio audience, we're looking at a chart, 85% were above their 200-day moving average. On a day where we see only 78 of the S&P 500 players climbing, we are having broad-based selling. There is no breadth in your buying, and it's still not quite that buying opportunity, Carol.
Yeah, and you know, Caroline, you do wonder how much of that has to do with the companies reporting. We've got fewer companies that are actually beating earnings expectations. I know, Romain, you wanted to say something.
Well, I was just saying, what was the percentage that you said there, Caroline, on that?
Currently 36%.
36%, wow. Okay.
Yeah.
Yeah. So there's a lot of volatility. You do wonder about kind of the outlook that we're getting from global CEOs. Speaking of global CEOs, there's so much on their plate. And Caroline, you had a great interview with the CEO and chairman of Macy's. We're talking about Jeff Gennette. And you guys, as always, it feels like supply chain comes up. And he did seem to indicate that maybe things are getting a little bit better. Check it out, everybody.
You look at kind of fresh receipts, which is the lifeblood of a retailer. About 60% of what we brought in last week were shipments that were intended for the month of February. That is a big change from where we were over the past year. So it is getting better. But I will tell you that we're not through the supply chain issues. They will continue into 22 and we believe in the beginning of 23.
All right. And of course, that's Jeff Gennette of Macy's, the CEO and chairman. I mean, Caroline, what did you take away from your conversation with him? Because this is such an iconic brand, plays to a lot of American consumers out there shopping.
Yeah, he talks so much about the various headwinds. He's still talking about the tailwinds that they've got, the fact that we've got a strong fundamental economy, a strong consumer, but the headwinds are still there. Supply chain not ending really anytime soon. also, of course, the overall inflationary pressure that he still sees. But the area of bright spot that really stuck out to me, labor. He actually said, look, the labor issues that we had are kind of past tense. We've now got the right sort of talent. We're able to bring them in. I wonder how many businesses can say that at the moment.
You know, it's fascinating that you bring up labor in kind of a conclusion, or I should say in coinciding with some of those supply chain issues, because to your point, this is something the Biden administration has been very, very strong about, saying the supply chain issues are going to kind of last for longer, but the labor side of it, that's going to kind of ease as we start to see some of these pandemic restrictions kind of ebb and flow. And as we start to see those Omicron cases drop, you are actually seeing some improvement in the labor market.
Interesting. I'm laughing a little bit because didn't we hear from the B of A report that consumers were willing to still spend on clothes and goods, but it was just like the grocery prices that we were getting a little bit uncomfortable with?
Yeah, I guess. I mean, no, look, I mean, it's kind of interesting. You go from sort of one headwind to another, and I think you have to kind of loop this back to, I guess, the geopolitical fallout from Ukraine. I mean, there's been a lot of talk here about whether markets should be down on something like this. I mean, when you look at sort of past military conflicts that the U.S. has been involved with, the Gulf War, the Iraq War, the 9/11 attacks, you know, there was a significant drawdown in the markets, at least in the short term. Over the long term, though, things tended to right-size themselves. But again, we're right now, as we speak, we are moving back towards the lows of the day here, and a lot of people are concerned about those ripple effects. You talk about inflation. Well, what's inflation going to mean if oil prices goes above $100 a barrel? Wheat prices continue to move higher. Soybeans at a 9-year high. These are real issues here.
Well, and it's certainly real issues if you're over in Europe who are feeling it firsthand. They have been already. And you do wonder how much of this, you know, ultimately impacts that economy and what it means for their global growth going forward. I mean, we've already been talking about recession, right? We've been talking about it in the U.S. and we've already seen it, Caroline, over in Europe.
But what's so interesting as we worry about inflation is actually how the market is pulling back on its rate hike expectations. Here in the Fed, we're now seeing, 6 rate hikes being priced in over the course of the year. The ECB, they're now seeing that the market, the swaps market, sees maybe a rate hike only in October. Previously, it was September. And Taylor, I'm kind of confused there for what the bond market is trying to tell us at the moment. Is the bond market not getting a bid right now because of we anticipate the Fed to raise rates, or is it not a haven trade? I'm trying to work out what the auction tells us and what yields tell us.
Yeah, certainly we've had some good auctions as of late, and I think a flat yield curve at just 37 basis points on the 2s, 10s. You're only a little bit away from getting sort of nearer to that inversion, but it certainly seems to be, Carol, this repricing on the front end at 5 basis points now to a 160. What is that telling you about what that market is expecting?
It does feel like both the fixed income market and the equity market trying to find what are their floors and ceilings in terms of how they settle in on levels. And it's really hard, certainly with this conflict going on. All right, folks, that's going to do it for now. We'll be back in less than an hour's time for our cross-platform coverage on TV, radio, and YouTube. Our Beyond the Bell coverage will take you through today's market close.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, obviously, you're listening to Bloomberg Radio. Kriti Gupta, Carol Massar, and our TV team talking about some of the things. I'm always amazed, Kriti, that when we have those conversations, not amazed, but it's just, you know, what if this, like there's so many questions out there. And I am a belief that there's a lot of recalibrations going on, whether it's our move to EVs and figuring out how climate change impacts and what we have to change because of that. What are supply chains going forward? What's real demand going forward? You know, and I think it's very tricky for the Fed to really play out its policy as a result of all those questions.
Yeah, and then add on these geopolitical tensions, which, by the way, it's really hard to kind of roadmap this because, sure, we've been here before, right? 2008, Russia with Georgia, 2014, Russia with Crimea. But in both of those instances, you didn't see actual disruptions in commodities and food prices and things like that. You saw the markets freak out, but to Romaine's point, you didn't actually see those long-term effects really change, and this time that could change.
I mean, I care more about like when we hear from the CEO of Macy's, what they're seeing in terms of supply chain. Like, I want to know what do supply chains get back to normal?
Yeah.
You know, student of economics, like I understand the supply demand. And there is a point where I won't buy things because they're too expensive, right? Yeah. I think that happens. And how does that help supply chains correct themselves? And as we all kind of get back to normal.
Yeah, the demand destruction piece is a very key piece of the equation. For me, my metric is at what point do I go from a $5 cup of coffee to a $6 cup of coffee?
You're crazy. I get it free upstairs.
I should do that.
All right, let's get back to world and national news. Off to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. More sanctions against Russian interests today from the Biden administration. The State Department's Ned Price says the U.S. is joining Germany in imposing sanctions against the Nord Stream 2 pipeline, specifically against the Russian company constructing the pipeline and its executives.
The fact that we are acting in unison immediately to take these steps that essentially remove Nord Stream 2 from the equation, that is a byproduct, that is a result of the work that we have done together.
The State Department's Ned Price, some 40 members of Congress of both parties are back from the Munich Security Conference, and Speaker Nancy Pelosi describes unity of purpose in support of Ukrainian resistance to the Russian invasion.
The Speaker said Congress is ready to provide more aid to Ukraine and its neighbors.
It's stunning to see a tyrant roll into a country. So the people of Ukraine know that we are with them in terms of meeting their needs with gratitude for the defense that the people of Ukraine are making for democracy.
Pelosi said the Western allies are in agreement on the pace of rolling out economic sanctions that would cripple the Russian economy and impact on Vladimir Putin, whom she called possibly the richest man in the world. In Washington, Irv Chapman, Bloomberg Radio.
U.S. health officials say some people getting Pfizer or Moderna vaccines should consider waiting up to 8 weeks between the first and second doses, not the 3 or 4 weeks previously recommended. New research shows that a longer interval can provide more enduring protection against the coronavirus. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week on this Wednesday. Carol Masser, Kriti Gupta, in for Tim Stanovic. He'll be back later on in the week. In the meantime, this is popping up among the most read on the Bloomberg. And right now, Kriti knows that she covers the markets inside and out and is just following all of the things that people are writing and tracking different metrics. And we're trying to figure out kind of what happens from here. And this is a story that's about hedge funds. U.S. hedge funds have been slashing positions in technology stocks, started 2022 more tilted toward cheaper shares than at any other time in over a decade. And this is according to Goldman Sachs.
Yeah, and this is absolutely a waiting story, right? Because this was one of the fears going into actually the beginning of 2021, the idea that if you are going to tilt your portfolio towards value, well, those value stocks aren't actually the ones that have the biggest weighting in the economy. If you pull out of tech, you are essentially bearish on the S&P 500, just given how big these companies have gotten. And that, of course, is something that you're seeing right now. You can have companies piling into energy, for example, and it won't be enough to bolster the entire stock market.
That's a great point. Well, this report, Ben Snyder writing this in a note to clients over at Goldman, filings show hedge funds positioning for a different equity market environment than the one that has characterized most of the last several years. Funds with $2.6 trillion of gross equity holdings have reduced positions in more expensive growth sectors in favor of energy and financials, according to the note.
And we all know that these hedge funds are the ones that have a little bit more money. At the beginning, it was actually retail that continued to buy and buy and buy. But at the end of the day, that hedge fund selling outweighed the buying that was even happening on the retail sphere. And you can see the result. This is a major sell-off, the likes that we haven't seen, I think, going back to March of 2020.
Which is why you look at some individual tech names. A lot of them have either had a 10% correction or even have moved into bear market territory, right?
Yeah. And what's also interesting to me is that, Carol, you always ask me, why does this matter to our listeners? Well, here's why. Well, because, think about it. A lot of these retirement accounts are actually exposed to ETFs that are exposed to the benchmark, not the individual stocks.
And you do wonder how this will ultimately, the move away from FANG, right? And it will kind of weigh on them.
Exactly.
Longer term. This is Bloomberg.
Put progress in your portfolio. Invest in sustainability with 3 new funds from Fidelity.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. Stocks are low and moving lower. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks under pressure again today amid increased Ukraine worries. Dow's currently down 400 points. S&P's dropped 65. NASDAQ is lower by 282. The U.S. 10-year yield at 1.97%. Gold is up 8. Oil is trading lower. And Bitcoin is down by 1%. Among the main 11 S&P sectors, only energy was in the green. And leaders to the upside in the Dow, Chevron and J&J, while Cisco, Home Depot, and Apple led to the downside. In other news, wheat hit a 9-year high. JP Morgan said oil prices will average $110 a barrel in the second quarter. And Axios reported that LinkedIn is launching its own podcast network. Wrapping things up, eBay reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. Really appreciate it. Hey, listen, one of the stories that really has certainly resonated with me, and I think it does with Creedy too, we've been talking about a lot of stuff off air, is about what's going on with technology stocks specifically and the slump that we've seen at them. Writing about it today is Bloomberg News equities reporter Ryan Lastelica. He is on the phone from Chicago. And I love the headline, Ryan, FOMO may lift mega cap stocks when the market turns. I mean, there's a point where investors are going to say, wait a minute, these are still strong businesses and they're on sale.
Yeah, absolutely. Good afternoon, everybody.
Hi.
So Morgan Stanley recently released its quarterly analysis of fund ownership data. And amid all the selling that we've seen in technology stocks, the data show that major names, including Apple, Microsoft, Amazon, Alphabet, and Meta, are all under-owned relative to their weight in the S&P 500 and all these major institutional funds. That's a positive signal, according to Morgan Stanley, because it does suggest that these names are under-owned, they've been maybe a little bit abandoned. Like you said, these are also names that have just so many fans out on Wall Street. They continue to grow at a really steady pace. And while valuations might be a little bit stretched compared with some of their historical averages, it's not nearly as extreme as some of the other parts of the market.
Ryan, talk to us a little bit about what people are actually watching when it comes to the tech universe. What is the signal that people go in to buy? Is it just looking for what's a cheap value on Apple or Microsoft, or are they exploring other parts of the tech universe, biotech, cybersecurity, semiconductors? What's your take?
Well, I have heard people talk about both cybersecurity, especially given the rise in geopolitical tensions. This is an area that is expected to get just a lot of spending from companies basically in every sector as they look to make their businesses as secure as possible. The semiconductor area, as always, remains an area of intense interest. Chips are used in basically everything, and amid the supply chain issue, this is just an area that continues to see very strong demand and somewhat lower supply right now. So, again, we have valuations that might be a little bit elevated compared with historical averages, but these are areas that are very strong. As far as what people are looking for, one thing I continue to hear is free cash flow. That is the primary metric that people are looking for. People want profitable companies. They don't want names that are hemorrhaging a lot of cash right now.
Well, and I do think, we've talked so much about the sector being under pressure because of the concerns about higher interest rates. And I guess I get some of that, because of what it means for future earnings. But nonetheless, if these companies ultimately do have strong future earnings, they have strong future earnings. And there's value there.
Yes. I think the tricky thing is that some of these names got very extended, and some of the bets that were being made were a lot more speculative in nature now. I mean, expecting that a name like Microsoft is going to have strong earnings growth over the next few years, that's not as, not the same kind of bet as you might see for some of these more speculative or software names that trade at really mostly valuations, and maybe they have an attractive business model or something like that, but they will also face debt, and they will face competition, and they have all these other issues out there that can also, will have to be factored in at some point.
Right. And we apologize a little bit to our listeners because I know the sound is kind of rough. We're living in a world of cell phones. And Ryan, maybe you can come kind of closer to your cell phone. Ryan, how do you kind of make sense out of what you are writing? And then we had a story that Kriti and I talked about for some of our audience about a Goldman report out there showing how U.S. hedge funds have been slashing positions in tech stocks and started 2022 more tilted toward cheaper shares than any other time in over a decade. I mean, there's just so many different cross currents right now in the market. How do you kind of square those two things, what you write about and then this other story about what Goldman is seeing when it comes to hedge funds on tech specifically?
I've certainly seen that trend a lot. According to Bank of America, allocation to tech is at its lowest since 2006, which is really just a remarkable turnaround because it did seem like for years tech was really the place to be. It was everyone's favorite sector for growth. It was everyone's favorite sector for revenue and market share growth and all these other kinds of factors. So right now there does seem to be a very well-known rotation out of growth names and into value. And while there are some tech names that would qualify as value, the weakness has been pretty widespread in the sector.
Ryan, you mentioned free cash flow just a second ago, and that's really interesting to me because since we've seen kind of this pandemic take place, you've seen a lot of these tech companies really accumulate a lot of cash, not just because more people are spending, but because they've been able to issue a lot of debt. Talk to us a little bit about how that squares with some of perhaps the acquisitions that they're making.
Mm-hmm. Well, we certainly have seen a pickup in the space as far as acquisitions go, especially with Microsoft, notably with its plan to buy Activision. These major names, we can talk about valuations all stuff as much as we want, but they are just these huge cash piles, and that is expected to be a way for them to make acquisitions as they see fit. And one thing I have heard from strategists and portfolio managers is that as prices continue to fall, it does make valuations more appealing for names that want to get in there and buy something that they can hold for the long term.
All right. Well, an interesting read, and you certainly do. Some of the folks that you cite in your story talk about investors, having the means and opportunity to buy tech when they want to come into it. So I guess maybe are waiting for things to calm down, and we'll certainly kind of keep an eye on for that trend. Ryan, thank you so much. Ryan Vestelka, he is Bloomberg News equities reporter, joining us on the phone from Chicago. And we've got just about 35 minutes left in today's trading session, and we've been pretty much down across the board, and we're just hovering near our lows, down about 1.6% on the S&P 500. Dow, a decline of 1.2%. NASDAQ really taking it on the chin, down 2.2%. Carol Massar, Kriti Gupta, this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week on this Wednesday and keeping an eye on the markets for you. And coming up, Cree, we've got your chart of the day. A little tease? Got a tease?
A little chart of the day is going to be on the biggest topic in today's news cycle. That's my tease.
That's a nice one. All right, I'm going to stay here then for that. But first up, let's check in with Charlie Pellet, get another update on that trading day. And Charlie, we're almost getting ready to wrap up today's day.
I want to try to guess the chart of the day. I'm thinking Ukraine, Russia, oil. Those are some of the big stories.
Don't give it away.
Well, see, you shouldn't have confirmed it, Creedy. But here's what's going on. The Dow, the S&P, NASDAQ, all on the minus side right now, at or near session lows right now. 28 minutes to go until that closing bell clangs away on Wall Street. Equities lower. President Biden expanding sanctions against Russia. New penalties hitting the Nord Stream 2 pipeline and its corporate officers. Right now, we have got the S&P 500 index down 1.51%. Yeah, I know, don't go decimal, but that is where we stand right now. We are in correction territory. Tech stocks selling off amid rising tensions. Also a cyber attack on several Ukraine government and bank websites. The Dow down 390, a drop right now of 1.2%. NASDAQ down 282, a drop right now of 2.1%. 10-years down 13.30 seconds, 10-year yield 1.98%, and we have got spot gold up 0.4%, 19.06 the ounce. Equities lower. As for the overall market backdrop, Aaron Brown is portfolio manager at PIMCO.
I think over the next couple of weeks, we're still going to be in a volatile period. So really timing the bottom is difficult. But I think when you step away and look at the fundamentals, the fundamental picture for equities is still quite strong. And I think, I've been somewhat heartened to see that the markets are not panicking. And when you look outside of equities, if you look at credit spreads, if you look at inflation swaps, if you look at 2s, 10s, they're still telling you that the fundamental picture for equities is still okay.
Indeed, we do have the 10-year yield at 1.98% right now. Crude, a major story today. 91.92 a barrel on WTI. Sources tell Bloomberg the Biden administration is considering tapping its emergency supply of oil again. Oil stocks are pushing higher today. ExxonMobil, for example, up 0.4%. BP up 0.3%. Chevron up 2.3%. EOG Resources up 0.9%, and Pioneer Natural Resources up by 1.1%. Recapping, S&P down 1.5%, 10-year yield 1.98%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. We do want to get to Creedy's chart of the day. And of course, you can sign up for her chart of the day at kgupta129 at bloomberg.net and check out her Twitter and Instagram feeds. You can find that at Creedy Gupta News. So, Creedy, you put French fries in a headline, and yeah, you got my attention.
I put French fries in a headline, folks. I emailed this out, and my chart of the day subject line today was that 80 rubles gets you a large French fries over at McDonald's.
Sounds like a lot of rubles.
It's actually not.
Oh,
because
it isn't?
80
Okay.
rubles is actually equivalent to $1. And if you were to
okay.
go to McDonald's right now, here in the United States, large fries are $3.29. Yes, I Googled all the McDonald's price menus, but I wanted to know what 80 rubles got you. But let me tell you the significance of 80 rubles here. My chart of the day shows the dollar against the ruble, and it's kind of this geopolitical risk metric, essentially, right? If you start to have this Russian risk escalating, naturally the Russian ruble is going to weaken, and that's exactly what you're seeing. But it's weakening in a very special way. It's weakening to a level to 80 rubles, the surprise number here, which is historically significant. Back in 2014, when kind of during the Crimea annexation, you saw the ruble weaken to 80. Once again, it tested that level during the coronavirus pandemic. It tested that level going into the election in 2020. So it consistently bounces off 80, and that's without sanctions. And so imagine if there are sanctions, or if something happens with oil prices, what could the effect on the ruble be? And if it were to drop or weaken further beyond the 80 level, say for a dollar you were to get 90 rubles instead, that would be really significant, not just for the Russian economy, but for anyone that has exposure to emerging markets broadly, because Russia does have a pretty decent kind of foothold in the EM universe.
Well, this is why when we think about, we see the back and forth going on, like you need to think about, all right, what are the things that could ultimately impact the Russian economy that kind of gets everybody to notice and maybe, potentially forces Vladimir Putin's hand to maybe ease right back. And something like this, right? A continuous weakening of their currency would certainly do it.
Yeah, anything that affects their purchasing power, right? I mean, this is something that you're seeing even here in the United States. We talk about this all the time, that inflation is eating into just how much we can spend. That's going to be a similar story when we're talking about Russia, because if your currency isn't worth as much as it was worth, say, a year ago, you're going to be able to spend less and less on top of the fact that you're dealing with sanctions, which means perhaps your bank accounts are frozen, perhaps your job security is more challenging. The economy just kind of crunches a little bit.
Why is that 80 level though? Why is it 80?
There's a few
it's weird,
reasons,
right? It's interesting that
there's a few reasons. I'm gonna put my trader hat on here. Not that I was a trader, but I've seen them at close range, kind of like zoo animals, and I say that with love, of course. They were my teachers. But what's interesting about kind of currencies when you trade them is sometimes round numbers can be this psychological level. And going back to 2014, intraday it hit that 80 level and then kind of came back, and then it hit it again in 2016. Because of oil prices, because of course Russia's economy is extremely exposed to oil. They get a good chunk of their revenue there. But when oil prices recovered, because the sanctions hit on Russia, the ruble never recovered. So it kind of stuck around the 80 level. It strengthened a little bit, but at the end of the day, it was never able to kind of overcome that. So not only is this chart on the Russian ruble significant in terms of the geopolitical risk, it's also significant in terms of kind of visualizing the impact that sanctions have had.
Hey, in the grand scheme of things, there's a couple of headlines that crossed, and you and I were noting them while we were, before we came back on air. And this has to come from a State Department spokesman, Ned Price, catching up with reporters, and this was just about 10 or 15 minutes ago, and saying a nuclear deal could be days away if issues addressed. We're talking about detailed issues remaining unresolved with Iran specifically. We had an earlier story on the Bloomberg that talked about Iran shifting more oil onto ships in a move to speed exports. Should talks succeed in ending its exclusion from global energy markets, but also this nuclear deal, right, is key to that.
Yeah, it is key to that, because think about what we've been hearing from the Biden administration so strongly, right? We need those gasoline prices to get lower at a time when energy prices are surging. And one of the kind of tug of wars that you're seeing in the oil market right now is, on the one hand, you see those Russian tensions pushing prices higher,
right,
but additional supply from Iran could push those prices lower.
Yeah, and about 30 million barrels added to tankers since early December. I mean, this is, as we said, this situation, the geopolitical tensions between Russia, Ukraine, or what Russia is doing in terms of Ukraine, its intentions and its actions, and then with its NATO allies in the United States, it's a reminder that there are a lot of things going on behind the scenes that play into this. It really is, in fact, impacting the world.
Yeah, and we should also know very quickly, another headline, the U.S. eyes release from oil reserves as prices rise on Ukraine. So that's one more tool that they can use.
And certainly to ease some of those energy prices. All right, let's get back to world and national news. Nancy Lyons keeping track of all of that. She's in our D.C. bureau. Hey, Nance.
Hey, Carol. As expected, Ukraine's parliament has voted to declare a state of emergency after Russia recognized two separatist regions as independent. The declaration gives local authorities powers to react to threats and to place curbs on people's movements. Well, the U.S. today also added new sanctions on the Russian company behind the Nord Stream 2 pipeline and its executives. And the State Department's Ned Price says more sanctions are to come if and when Russian President Vladimir Putin orders his troops to move beyond the two separatist pro-Russian regions in the eastern part of the country.
If Putin escalates further, we will escalate further using additional sanctions and export controls, which we've yet to unveil, but are fully prepared to implement with allies and partners across the globe.
Price says the U.S. remains open to diplomacy if Putin is willing to change course. The former British ambassador to the U.S., Sir Peter Westmacott, tells Bloomberg after watching Putin's speech concerning Ukraine, he's not sure anyone knows what the Russian leader is willing to do.
It was kind of incoherent rambling of somebody who was raging rather than somebody who was necessarily calculating in a rational way. But of course, we never quite know what's theatre and what is the real person.
Sir Westmacott says some foreign diplomats believe Putin is not the same guy. Well, a new poll finds little support among Americans for a major U.S. role in the Russia-Ukraine conflict. The AP NORC poll finds just 26% of Americans say the U.S. should have a major role in the conflict, while 20% say the U.S. should not be involved at all. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Creed.
All right, Nancy, thank you so much. Nancy Lyons in our D.C. studio there. And this now is our most read on the Bloomberg in the past 60 minutes. And Creedy, you mentioned it. The U.S. eyeing a release from the oil reserves as prices rise on Ukraine. I will point out that WTI crude, we're definitely off our highs. We're up as much as 2.2% at about 94 a barrel. Right now we're about 91 and change, almost 92 a barrel, just down a hair.
Yeah, what's interesting about this is that, one, the Biden administration has already done this, right? We had this coordinated release in November to deal with surging oil prices, specifically in Europe, that were affecting natural gas prices as well, kind of collaborating with India, with China, Japan, South Korea, basically the major oil-consuming nations of the world. And the consensus was, this is kind of a short-term solution. This doesn't tend to have that sticking power.
Right.
So it's interesting that they're considering this once again.
But, you know, sometimes you got to do a short-term move to get to, while tensions maybe ease, hopefully, cross your fingers.
Right.
And then, you know, some stability comes back to, in this case, certainly the energy, the oil markets. These deliberations that are going on, according to those in the know, follow a White House move, as Creedy said, back in November, and that's when we did see those 50 million barrels of crude release. And so this is something we're watching. The Biden administration, as we said, the headline, considering tapping its emergency supply of oil once again in coordination with allies to counter that surge in prices brought on by Russia's move against Ukraine. Again, according to those in the know, no decision has been made. Quote, robust conversations within the administration are said to be underway, including on potential price point triggers and how to coordinate a release from the reserves with other nations. Again, according to those people who asked not to be identified in terms of what's going on. I think, you know, this is what's interesting too. I feel like in a world, certainly through the pandemic, we weren't all on the same page, but it does feel like certainly the U.S. and a lot of its allies are coming together on these tensions over with Russia and Ukraine.
Yeah, and I think, I mean, the gas prices is what's crucial here, right? This is the why does it matter to our listeners piece of it. Because especially analysts are saying with these surging prices, it could get as high as $4 a gallon. And that's also what, and just from my reading, I've understood is kind of where people say that's when people are going to stop kind of buying gas guzzling cars. They're going to stop taking those road trips. That's what we call demand destruction. And right now, gas prices, $3.54.
I mean, I see it when I fill up at the tent.
Yeah.
Like, I just kind of shocked from just 6 months ago or a year ago, certainly, the differences that we are seeing. And that starts to certainly impact Americans in terms of the wallet, the money that they have in their wallet, and it impacts things. And as you said, this becomes a political thing as well with these midterm elections. All right, we are continuing to watch what is going on in terms of Russia and its moves on Ukraine. We did see President Biden expanding Russian sanctions to Nord Stream 2 and also expanding when it comes to some of the corporate leadership over in Russia, specifically the penalties on top of a package announced just yesterday by the White House after Russian President Vladimir Putin moved to recognize breakaway territories in Ukraine as independent states. That is where we are. We saw a lot of volatility in the markets yesterday, Creedy, and it does feel like still some pressure, but coming down maybe a little bit.
Maybe a little bit, but at the end of the day, it's that factor of uncertainty, right? Golden rule. Markets don't like uncertainty, and there's plenty of it right now.
Yeah, and we continue to hover near our lows of the day when it comes to the equity markets. All right, right now on Bloomberg Radio and TV, we want to welcome our Anne-Marie Horton. She's Bloomberg Washington correspondent. She's sitting down with Ukraine's Foreign Minister, Dmytro Kuleba, and getting to talk about the current situation and the pressures facing Ukraine.
I want to welcome our Bloomberg television, radio, and YouTube audiences in this global simulcast. As Ukraine tensions escalate, President Biden expanded sanctions against Russia with new penalties hitting the Nord Stream 2 pipeline and its corporate officers. Joining me now in an exclusive interview is Dmytro Kuleba, Ukraine's foreign minister. Dmytro, foreign minister, thank you so much for your time today and joining Bloomberg.
My pleasure.
Let's start with those fresh sanctions. You have been pushing for more, for the West to up the volume. Have they done it? Is this enough?
Well, they did the first wave, which is welcome and helpful, but it sends a strong message to Putin, but it still doesn't stop him. So it means we need more sanctions, we need the second wave, and then probably the third wave, until it gets clear to him that he shouldn't make any step further.
But Nord Stream 2 specifically, this is quite significant.
It's a big move, and we welcomed this decision by the German government. The United States contributed to this result, but Ukraine has been was calling to put the Nord Stream 2 on hold for years, and no one was listening to us. If these sanctions had been imposed earlier, perhaps we wouldn't be having this situation today.
You tweeted at 3:20 in the morning, hit his economy and cronies, hit more, hit hard, hit now, talking about Putin. For you, what would be enough?
For me, it's clear when Russian soldiers withdraw. This is
What would be enough in terms of the Western sanctions?
Well, again, I mean, there is an elaborated toolkit of sanctions prepared by the United States, Britain, Canada, European Union, and they impose them one wave after another. I know that some severe financial sanctions are still in the pocket, and we believe they have to be imposed in order to stop Putin. And of course, the nuclear option that everyone is talking about is the disconnection from SWIFT. Exactly. I know there are some doubts, but this is a difficult situation, and a situation like this cannot be fixed without making difficult decisions.
So you think they should go as hard as SWIFT, but the blowback will hurt their own economies. Is this something you discuss with foreign leaders? Do you think they're ever going to be prepared to take those repercussions on their own economies themselves?
A war between Russia and Ukraine will inflict much more damage on world politics and world economy, because what is at stake now is the existence of the world order as we know it. Russia doesn't only attack Ukraine. Russia is a permanent member of the United Nations Security Council who bears special responsibility for maintenance of peace and security. It attacks another country. If they succeed, it will be a message to everyone that rules do not work anymore and the world will be thrown in chaos. So it's better to pay now to deter that and to prevent that from happening.
But this is the fourth time. President Putin recognizing Donetsk and Luhansk is the fourth time since the breakup of the Soviet Union he has single-handedly, unilaterally redrawn that map. Sanctions, 2014, the poisoning of Sergei and Yulia Skripal, they haven't worked, have they?
No, they did help a lot in 2014 when the economic sanctions were slammed against Russia. That helped to stabilize the situation on the front line in eastern Ukraine, and President Putin realized that his actions come at a cost which he didn't want to bear. But you're absolutely right. Again, if the world had reacted to Russia's previous aggressions against Georgia, in Moldova, in other parts of the world, in a more resolved way, we wouldn't be sitting here now, because it's impunity that feeds Russia, and this is why he finally has to pay for what he's doing.
What about your own economy? A third of Russian gas flows through. Those flows were kept at a pretty minimum this past year. Are you worried that at some point the Kremlin will cut off those flows that your government gets billions of dollars of transit fees in?
Ukraine has always been a reliable transit country for Russian gas to Europe. For political reasons, Russia decided to bypass Ukraine, and this is how Nord Stream 2 and Nord Stream 1 were born. But there is a conviction in Europe that Ukraine must remain the country of a transit for gas. So yes, we make money on it, but Russia makes even more money on selling gas to the European markets.
And they still are, even if Nord Stream 2 doesn't ever come to light. I want to move to the diplomacy of this. You sent a letter to Kiev yesterday saying we should cut off diplomatic ties. Ukraine should cut off diplomatic ties from Russia. Will that happen?
Well, this issue is now under consideration by the president. We have this instrument in our kind of diplomatic toolkit. I firmly believe that we should have done it in 2014 when Russia annexed Ukrainian Crimea and invaded Donbas. This wasn't done. I don't know what else has to happen for the country to break up diplomatic ties with the aggressor. This doesn't mean, though, that we will shut down our consular presence, because we want our consuls to stay in Russia and to continue providing services to our citizens.
But yesterday, standing next to Secretary Blinken, you said Plan A, utilize every tool of diplomacy. Plan B, fight for every inch of land. If you cut off those diplomatic ties, does this mean you're now at Plan B?
No, because cutting diplomatic ties does not mean that you cut off communication entirely. It's just a different mode of maintaining a line of contact and talking with each other. It's a diplomatic gesture, a diplomatic decision, but it doesn't mean that we will not be able to speak with each other.
Ukraine, for the past few weeks, has been trying to play down a full-scale invasion. But now we have a state of emergency in the country. What's changed the assessment?
The movement of Russian forces closer to the border, their movement inside of the occupied territories, closer to the front line, and of course the decision of President Putin to recognize so-called Donetsk and Lugansk republics as independent countries was a game changer, not only for Ukraine, but for global politics as such.
I also want to ask you about cyber. That's something that happened today. Again, more cyber attacks. Your own foreign ministry's website was hacked. This has been going on for years. Banks, the metro, power. In your discussions with Western leaders, you talk about tit for tat with Putin and sanctions. Do they ever talk about potentially hitting Russia with cyber?
No, I think cyber attack is like nuclear weapon. No one wants to.
But two has happened to you in the past week.
Yeah, that's what Russia did to us. But we did not receive any proposal about hitting Russia with cyber to retaliate Ukraine. And this is not what we're looking for, but we try to build our own cybersecurity, and we're working closely with the United States and also with the European Union to make our own system stronger.
When President Putin recognized Crimea as a separate state, 24 hours later, he annexed it. Do you expect a similar scenario with Donetsk and Luhansk?
Not within the next 24 hours.
But do you expect that at some point in the near future?
At certain point, the problem with President Putin is that he lives in his own world. He doesn't have checks and balances.
What's up, guys? I'm actually having a little bit of an issue with the with my webcam here today, setting it up. It won't turn on for whatever reason, so I'm not gonna be able to come on live and speak to you guys, especially on this very important close that we're gonna have today. But basically, if you guys want to hedge against a situation that's about to go down, markets look like they're gonna continue putting lower. They broke the support area that like I said today, was gonna be a very decisive point for us. At this point where we're ever to be broken, we were gonna head lower, and that's literally what's going on right now in this present moment. Markets are trying to head lower. They're trying to find new lower lows because things look like they're gonna get increasingly worse, especially with the whole Ukraine and Russia situation. So that markets definitely don't like that, and as we all know, since we have so many new investors from the last year and a half, 2 years that have stepped in the market, they're very apprehensive about situations like this. So whenever a situation like this comes up, they're the first ones to book it. They're the first ones to get out. They're the first ones to leave this situation. So the fact that we're breaking today's low, the support area, we broke the area of support that I set for you guys, means that we're gonna continue to push lower. Markets have all the way down to about the 100-day moving average in the weekly graph. So that's 388 dollars per share. So we have all that room to collapse down here. Let me see how much that is. So from here to here, holy fuck, no way. It's like a 7% correction. So that'll put us into not correction territory, but already downtrend territory. The 7% plus what we're already falling off the top, it'll be damn near 20% for the SPY. So yeah, deep correction territory. A 32-point move. So it's going to be very interesting. So basically, I'm expecting markets to gap a whole lot lower tomorrow and then possibly continue going lower throughout the week. As a hedge against this, to save our butt, save our portfolio, like I said earlier, we could buy a silver, or we could also buy some XM or USO. Why? Because they've been on this extended uptrend, and now it looks like they'll be pulling a whole lot lower. As a matter of fact, if markets do open lower tomorrow, these stocks are more likely than not gonna go down. The only reason why they might go up is because of the whole war situation and everything that's going on. Since they're oil stocks, they might rise because it's typically how it goes whenever there's a situation like this, especially a war or imminent war. So there's that likelihood of that happening. So if you guys want to hedge your portfolio against a 2% correction tomorrow or a 3% correction open day, you guys could buy some XM, some USO, or some silver. Silver calls and then XM or USO puts. The exact entries I'm not going to tell you guys, but you guys could definitely do that if you want the exact entries, the strike, the expiration date, the price, all those things. Profit target, stop loss. You guys can go ahead and join our Discord group. I release daily alerts there, and you guys won't miss out on opportunities like this to make money. Yeah, the VIX is over $30. Whenever the VIX is over 30, this is a very, very bearish indication that the market is going to continue lower because of the now increased volatility that we're having. So this is we have to be extremely careful the next couple of days. We don't want to do anything drastic and blow our accounts, because just when you think this is going to stop, it could continue selling off, or when you just think it's going to be selling off, it could very easily turn back around and negate the fall. So anything can honestly happen. I think that about wraps it up for today. Markets about to close in a few seconds now. Yeah, just like that, markets are closed. So like I said, I'm expecting a gap lower tomorrow. Ideally, we find support and bounce back up, but I don't think that's gonna happen, given the whole Ukraine-Russia situation. Until that situation is under control and settled, I don't see us leaving a choppy, crazy, volatile market situation anytime soon. So we have to be very careful with our entries. Any moves that we make, because we thought this was gonna be a bullish entry today, and look how we sold off. So yeah, I'll see you guys tomorrow. Hopefully, tomorrow's a better day. Peace.